Good day. Today I'd like to take it serious. So without finger snaps and greetings, I'll go straight to the point that I believe most of the people around me do not understand, and it's very crucial. I believe you might have 2-3 years to actually make a substantial difference in your life, not because it's needed, but because later on it will not be possible. And the reason for that is very simple. We live in an unprecedented modern monetary theory times where the government is printing the money out of thin air, and at a certain point when the inflation is gonna creep up, the interest rates gonna stay high, it might be simply unaffordable for majority of population to earn any assets at all or to own any assets at all. So let's be clear, and in today's video I'm gonna go through a few recommendations when it comes to decision making, also when it comes to psychology, of how still to master that for yourself. Of course, we're gonna have a market review in the beginning because I always like to illustrate the things that I mentioned on the charts, but it's extremely important that you stick today to the end. Guys, I'm starting this conversation not because I want to make some kind of doom calling. It's because I've been observing thousands of people in the private Telegram group, also here in the comments. Since I joined the channel, I spent a lot of time reading the comments, and I understand how the entire inner mindset of the people is actually preventing them from making it. We live in a narrative of WAGMI, like, wow, we all gonna make it. Unfortunately, that's not the case. And earlier you understand it, better it will be for yourself. The market is the zero-sum game. And of course, there are situations when we are going through the tremendous new technological uprising and new bull run, as it happened in crypto, as it happens in AI, but those things are not going to happen sometimes for decades, sometimes for 2 decades. You know, if you would look what happened between internet emerging and crypto appearing, that has been a lost decade, and that's a very tough environment. Right now, that lost decade might be actually the lost decade that would make it lost for most forever. When you see all the futuristic sagas and utopias, there is going to be Dune, what happened a few thousand years prior to the scene that you see in the movie or you read in the book, or the Blade Runner, you see all these transnational corporations owning the entire world, and the people in the bottom are living from the universal basic income. Yeah, it's easier to create the universal basic income in an economy that is highly automated thanks to AI, but is that a life? Is that a free creative life? Is there any degree of freedom in that life? I believe no, and that's the reason why I would call it rather digital feudalism than anything else. And that's the term I didn't coin myself. That's a normal development, how the capitalism in the later stage unfolds when you have the cloud monsters like Amazon or Google owning pretty much the entire infrastructure, and you can be a local merchant somewhere in the mountains of Spain who wants to transact with another merchant somewhere in France, and the only way to do is via Amazon. And that's why those transnational corporations are going to own the piece and everything everyone does around the world. So this is why it is called feudalism. But without going too deep into the topic, what I want to emphasize today, we're going to go, of course, through the charts. We're going to go and cover the most important things that actually prevent people from onboarding the wealth mindset. And we'll see how much time we have, but I'd love to also share some of my observations. Of course, for everyone worried that I'm just going to be talking, that's not the case. I'm going to show all my vision through the charts, and we're going to go through a lot of crypto and other asset classes today. But please stick with me because I'm going to emphasize all my learnings throughout the video, simply illustrating them with the real case scenarios. With all that said, guys, let's start. And I'd like to start here with the unemployment claim number that came in yesterday, kind of in line with an expectation, slightly higher, but not significantly. So it gives a kind of good projection for the recession to not yet be in place. If you watch my previous video, you remember I've been saying that the market is acting with really low volatility and very sustainable melt up. It's very bullish, but it's pricing in the opportunity of the Goldilocks and then the rate cuts. What's going to happen to the markets? What's going to happen to all this overbought on NASDAQ, on NVIDIA, on S&P 500? If we're going to start pricing in the recession scenario. And so far, that's why I said it's important to watch the the jobless claims, but so far it seems like they are fine. Still start your week with observing them. Nevertheless, there is another thing that is kind of concerning. And the reason why I mentioned that is because we familiarized ourselves with an idea that 0.2 months over month CPI is something that's gonna stay in there. But when I look in the chart, I really, guys, see the huge trouble here. And the trouble is the fact that just within last 10 days, oil has already made 12% itself, and oil services, that's where I'd like to be positioned, they are about, I think, to start their breakout rather sooner than later. I'm seeing something like that. And what does it mean? It means that Fed is in a tough place, because if jobless claims are starting to get up, that Federal Reserve, in order to prevent the recession, can only start cutting if CPI month over month at 0.2 or below. And do you think that with this 12% oil spike, and oil is ingrained into all the services, all the logistics, and much more, that we're gonna receive the same print as last month? I personally believe that if there is no magic around methodology, then it's not possible. And that's why I'm getting concerned, and that's why Bitcoin is behaving exactly the way it is behaving. And if you're gonna have a quick look on the BTC chart now, you would see that Bitcoin is playing out the scenario I was indicating in our last video. It is start to accept in the lower range of the zone. Of course, as we discussed, you can try to long it here or there, but it's very probable that it might revisit the lower band of the range, and that is why I'm emphasizing it. Try to build and try to learn from me to build a holistic picture in your head. And yes, this damn oil is affecting Bitcoin, and there is nothing you can do about it apart of learning it and incorporating it in your knowledge. And here I come with a rule number one, why I believe most of the people would not make it, because they are preventing themselves from thinking through probabilities. That's one of the most important things, to be humble with the market and to understand that no one knows anything. When I joined the channel, I remember I was shocked first with the comment of the guy who said, "Oh, you didn't tell me if it's gonna go up or down. I'm unsubscribing, I'm unhappy." And I'm like, I'm sorry, but yes, of course there are cases when I see things with 80+% probability. And that's why my win rate is also above 80% probability. And it's not only because of short-term trades, my P&L is also an all-time high, so I let my winners run. So yes, me personally, I might see things with 80% accuracy, but I don't want to tell someone what to do, because most of the people in this channel, they started their journey to build up their agency, to build up their sovereignty, to start the journey into crypto, instead of the government or the employer telling them what to do. Yet those people are coming and blaming me for not telling them exactly what to do. This is not the mindset I want to grow here. That is why I believe that if you follow that channel for 2-3 years, you would not need me to conduct a smart financial decisions. And here I'd like to take another minute and to illustrate that it's extremely important whom you surround yourself with, because a lot of people in crypto, they're posting their gains, they're posting their cars, they're making their walkthroughs in their apartments in Dubai. This is not a wealthy mindset, guys. This is like make it quick, make it rich. All these people who were taxi drivers 5 years ago and then starting trading the breakout triangles and posting their P&Ls from their mobile phone, you know whom I mean, right? This is not how you actually onboard the smart financial decision making that would help you and your family to reach the financial freedom. This is sometimes even much worse, because that lures you into the idea, into the fake ideas, and that still prevents you from building up the right set of skills to help you navigate the next tough decade that, in my opinion, we would have. But I don't blame these people. They are there since the universe is providing us an input, and you decide how to react to them. And this is why my rule number 2 to actually make it in the upcoming decade is to learn how to observe yourself. And most of the traders are not understanding the importance of it. It is as important to observe yourself as you observe the markets. And one of my favorite authors, Dr. Alexander Elder, probably would need to make a review of one of his favorite books of mine, always emphasize that in his publications. So if you feel FOMO, if you see that someone just made $30,000 overnight and you are not there, Ask yourself a question: why do you feel incomplete? And what's the psychological reason for that? And work through that. This is extremely important to sustain your trading and bring it to the next level. Now let's go back into the charts. I was telling you, you might not feel very comfortable yet in your trading journey, trading crypto intraday, making all these nice gains sustainably. That's fine, but you need to have assets. You need to own the assets, even if it's $500, even if it's $1,000. So in our Telegram group, I posted the call to start adding 60% of our positions into the uranium trust and the physical uranium trust yet before we enter the uranium miners, and then we added up the remaining 40% of the position in here. I believe that we actually went through the ABC correction, and if I'm gonna go on a weekly, you would see how this chart looks like. This is the clear ABC to me, and we are holding this 50 exponential moving average on the weekly, and I think the way is much higher from now. Now, second thing that I'd like to own, I mentioned it, that's the WAGMI Oil Services ETF. I'd like to scale in everywhere within this green engulfing weekly candle, 298 to 304. I want to own it, and my next targets are somewhere in the 420 zone. The thing number 3 is not a surprise to be silver. Bullish flag. Can we go lower? Yes, of course. Can we break that flag right now? Yes, it is also possible. Nevertheless, I would still preach a little bit of caution here. I consider, because the banks and the CUT data, it's quite bearish. A lot of banks are very short. I would believe they would try to squeeze the price one more last time down. How much down? Well, there are a couple of options. Frankly speaking, looking on the daily on silver, it looks okay. But when I also look at the COT chart, I see one of the biggest shorts that the banks have been building. So coming back to the weekly chart, I would not totally exclude the probability of 26.4 to happen, because that would eliminate all the technical traders who are actually considering this bullish pattern to be in place. Getting all the way there would kick them fully out, and then we probably would smack through. This is something you also need to be ready for. That's why, on the other hand side, look at the picture from miners versus silver. Once again, SILG is not something I personally like. A lot of really major companies there with a huge share dilution. And, you know, with the silver drop of this morning of 1%, SILG is still opening where it closed yesterday with this quite a bullish candle. So it can also happen that silver would correct down and miners would stay where they are. Most of our miners are looking quite good actually here. OCG, beautiful 8% yesterday, above 200, 850 exponential day moving average. I would actually give more relevance to the averages because we are in a daily time frame and we are in the commodity miner. So it's very different comparing to when I analyze, for example, Bitcoin. For those who would have this question, of course, Silver X mining, also very bullish closure yesterday. Kootenay silver, same picture. We are definitely had a great opportunity to add while being in this range, and so on and so forth. That's why before you learn how to trade, might take a year, might take 2, might take 3, that's okay. You still, in my opinion, have to own certain assets. And in my opinion, silver mining industry, it's still yet the place where those assets are more affordable. Because guys, be honest with yourself. What happens if we are getting through this period of stagflation and various forms of governmental support to those who are in need, either in the form of stimulus checks or universal basic incomes? Imagine you own $10 million and you still have those higher inflation, so you have to keep your interest rate also high. With $5 million, making 5% a year gives you $250,000 passively, and you might need those money for you and your family to spend. What if you have $50 million sitting? Then you got risk-free $2.5 million and might not spend the entire $2.5 million on the year where there's so much of uncertainty, you might spend just $500,000. What happens with the remaining 2 millions? For the high net worth individuals, you go and you buy more assets. You don't want to keep them in cash. So those assets that have been already inflated become more and more and more unaffordable for normal people who are actually trying to make their living going to the work, like actually working their ass off from, 40, 60, 80 hours a week sometimes. It's harder and harder for them to afford a flat, to afford any stock down there. And it's one of the reasons why I also joined the channel, because I believe this financial mastery and opportunity to give yourself that freedom from the burdens is one of the things that would make me inevitably happy to see around in the community. Because once you can master that level, you can only be further and give back and be kind and work on your purpose and do something that you actually came into this life to do, fulfill your dreams. It only can start from the level that you don't need to worry how to pay your bills. And unfortunately, that's how society is organized. Majority of people are getting stuck into that zone, so they are becoming better implementers of the societal agenda and conditioning. But without going too deep into that topic, the thing I wanted to emphasize here, once again, own a piece of business while you're learning how to trade. And of course, practice risk management, because it's super important. You don't want to be burned out through your trading, through your learning how to trade journey. That's why, once again, you can not lose more than 2% of your trading capital in one particular trade. It's all about preservation and it's all about making it. So give yourself a little bit of time, trade with the slow amounts, but start learning how to trade. Even if you're trading with $100, it's important that you observe your progression, you journal it, and you see how your win rate, how your risk rewards have been unfolding. That gives you confidence. That gives you an ability to make smart financial decisions and trading decisions yourself. And this is why I'm here for you to stop always relying on me in the long run. So for those guys who told me why I'm not telling him to buy or to sell, bro, I'm here for you to make the decision yourself. And I'm giving you all the knowledge I have to empower you, not to make you being dependent on me. But it's also okay in the beginning of your trading journey to not know what to do. And that's why we have this Telegram group. I'm gonna post the link in a comment section down below. Also, guys, to let you know, we are already around 1,000 people. So I am not having more of capacity to reply and to mentor. So we're gonna close the group next month. And then we're gonna make the paid service and paid group, which of course is gonna be different conditions for the members of the current group. But it's also, I would like to hire more moderators, curators, and the people who actually can provide a 24/7 service for the group members, because sometimes I feel worried. I wake up every morning to a lot of thankful messages, but sometimes I also need to sleep, and sometimes crypto is not sleeping. So I would like to make around the clock service for those people who feel actually the need to ask for advice. And so, but nevertheless, we went long on Palantir. I think that was an amazing call. Around 21, we did 27% in a matter of 2 weeks. If you remember, we've done the same with Apple. We went long around the levels here, 174. Apple have done 28% for multi-billion corporation. That's incredible. And so on and so forth. So we took multiple trades, not just on crypto, but also on the stocks. Not to mention the value plays that are also there. For example, when it comes to, of course, junior silver miners or lithium. I think lithium today would be at the level where we would start to add up uranium and so on. Now coming to crypto, I know you've been waiting for this for a while. So others, as I said, still can go tiny bit lower. One last squeeze down. It's the dominance of others, other cryptos, excluding top 10. So if you're wanting to be positioned in alts, I would like at least for the confirmation to have that range reclaimed. DXY looks quite bullish. I've been indicating that we are breaking through that level of resistance. Maybe 105.8 where we are right now can provide us a little bit of a pullback back into our channel, but so far it is looking quite quite bullish. Euro USD is fighting here to hold its support. I'd like it to start making something, or otherwise it's halas, and then the DXY would definitely squeeze above. On the other hand side, on the positive news, I like how Ethereum to Bitcoin chart is looking like. You remember, for those who watched my stream last week, I've been indicating that this is the line. This line, guys, staying here since months. I did not adjust it. Please, for those who don't believe me, go watch any video of mine. It is staying at exactly the same level, and you see how this level is being respected. So this 5.4% Ethereum versus Bitcoin is holding up quite strong, and I might consider that this range on Ethereum might have been probably the last swipe, because we revisited one more time the range low, and maybe from there the move is towards the range high, of course, if Bitcoin allows for that. And what needs to happen on Bitcoin? Also, some good news regarding Bitcoin, that this fair value gap that I just highlighted here, the red rectangle, this rectangle, has been tapped, right? So the reversal can happen from here also, because at the end of the day, no one knows where it's going to happen, and it's going to happen in the most unpredictable situation. It's quite unlikely that, it will go all the way down to the range low, bounce here, and just do its way up. It doesn't happen that often. It's too obvious, because obviously this way it doesn't trap anyone, and it's all about trapping the traders, especially the people who are experiencing the leverage that are more than they are able to handle. So yeah, what happens here, for example, when we lost the range and everyone started to shorting, it can be the same situation here at the mid range right now, and then we covered this fair value gap, and bum, we can also shoot up. That's why you always need to look on a confluence of the factors. You always need to include DXY, which is quite overextended. I think it can definitely give a 1 or 2% pullback. So yeah, Bitcoin can bounce from here. And this is how, for example, we made really nice money on leverage playing that bounce on BTC. You remember, for those people who are in the Telegram group, we went long here and we played it all the way to here. That was a really nice move, and it printed the higher high, so everyone started getting bullish in here, and that's why we exited that long. So you need to also really understand, and that's why we are making this lower lows right now. So you need to understand the psychology of the market and the herd mentality, and it's super important. And here I want to emphasize another thing, guys. There is no lack of good technical analysts. They're people working in newspapers. They're working for well-reputable magazines. Sometimes they work in academia. Sometimes they write amazing PhD papers. And there is no problem with their level of IQ or their knowledge of indicators, oscillators, and whatnot. But there's yet less than 7% of the people who can sustainably make money from trading. So what is it there that separates those very smart people from making it? Someone who is like 30 years experienced as the corporate lawyer or the economist, he cannot trade, because that's not about his technical skills. If it would be all about TA, that we all would just go and make money. It's all about mastery. It's all about psychology. And that's the reason why I actually stepped into the journey, just to self-master myself, learn about myself much better. Prior doing that, I was already going to India, living with the monks for like a month, waking up at 4 a.m., meditating every day, doing vipassanas and all those things. Yet I believe that is the way to self-master yourself at a completely different level, because you start from such a degree of uncertainty. And very often it's very painful, and we learn through the pain. So don't be afraid to experience that pain. That's a part of the journey. That's a part of the growth. And a lot of people who are also not able to onboard this wealth mindset, as soon as they see the pain, they run away from it into the pleasure, into the joy. And I want to do something that gives them immediate validation, but they are not here to stay for the long-term game and to go through that valley of despair where the majority of people are actually get burned out. So your necessity is to stay as long in a game, to protect your capital at least for 2 years, so you can go through that valley of despair until the moment you start making money sustainable and build your edge in trading. That's why no one can just come, get a coaching call with you and give you this one strategy that's going to work, because the strategy is really working. But without the right psychology, I see it all the time. The same entry, the same stop loss, yet two different people have two different results. That's super important that you stick to here until you master this wealth mindset and the psychology around it. And here you need to be quite careful. Looking at the chart, I want that market structure to be changed. Either it's going to be something like that, or it's just going to be a bullish closure, a hammer candle. It's also possible. But I'm telling you already, if we are bouncing and not able to reclaim, then I'm going short all the way to here, my TP1, my TP2. And in that case, be cautious. But if you're able to accept above, then I would also look on longing some alts, because looking at Bitcoin dominance, I see that we are still not able to break out. And it's very probable that we're going to do that and maybe even lose that levels. Who knows? So far, we could not get above, right? So I would be rather looking for alt than for BTC itself, because Bitcoin strength is bearish. And which alts I'm going to be looking at? I'm going to give you two examples. And this altcoin trade-off today for me will be TRB, because it seems like both spot and futures are adding up here. And then I see futures are actually starting to short, but spot is not selling. Open interest is very indicative of this uprise move. It comes along with the price, which is the good sign. And when I'm looking on TradingView, I see there's, smaller coins that can actually be traded with this meme line breakout. But what's important for me, much more important, this diagonal line, is the fact that we are accepting in the previous range. So I would say if we are not invalidating this very bullish candle, we are able to target those equal highs around the area of 125. And the stop loss would be basically if we are starting to reverse. However, it can also be a potentiality that we are retesting this breakout line and only then going up. And this is why I recommend you adding a few limit orders along the journey and not going all the way up in one shot. This is something I am also personally doing quite often, rather often than not. For example, you can see here on Bybit, I like that exchange particularly because it's quite easy to set up multiple limit orders. I mean, I can show next time how I do it with a set of automation. But you see, for example, my position here is relatively small. I am only 8 Ethereum in, but if we're getting lower, I'm getting more and more filled. So I might increase my position all the way to 70, 80 ETH with Ethereum getting down to 3,200. So with that said, my average filled price would be around 3,200 or 3,250. And this is very good because that provides me an ability to exit not at a loss, but slightly around the break even if I see that my hypothesis is being invalidated and we are not yet bouncing from the range low, but we start creeping down and maybe, Bitcoin is accepting below 60,000, things go nasty, everything can happen. Macro can affect pretty much everything. If you start seeing the different tone in Federal Reserve talks, Jerome Powell comes out saying, we are not yet ready for the cuts, and many things can happen. We are in the world of crypto. That's why I recommend you all to give yourself that opportunity and to DCA in both on spot and on futures. So the great thing about spot, also personally, the reason why I showed Bybit in this video, because I've been struggling to find the platform where you can purchase the spot and then set up OCO, like attach the stop loss and the take profit at the same time. There's many platforms are clearly benefiting from you not being able to do so, and then you have to manually either adjust stop loss or put the take profit or stop loss or take profit. At the end of the day, one of the times you would forget to do those, and then you basically would either get liquidated or you would have to sell, at a higher loss with a bigger slippage, and platform is actually making more money out of it, market making on you and stuff like that. That's why I prefer already to have my points of invalidation clear, even if I'm trading on spot. And if you are curious, let me know in the comment section down below. Some people are asking, how do I decide if I trade today's spot or if I trade futures? There are like several reasons for those. I already answered those questions in a private group, but maybe there are some people that still want to know. With that said, please give yourself a little bit of room to DCA. It's easier to be done on futures, but you can also adjust, for example, the size of your entry. So you see, for example, each $5 or $10 I'm entering with 1.5 ETH, but lower we going, higher is my positioning size, and then I start adding 2 Ethereum per $5 or $10 price difference, right? So that's how those things work. I'm posting the link here in the comment section down below, where all you need to do is to go with my referral link and get actually $500 worth of trade that you can do. You don't have to take it all in one place. Once again, as I said, you can scale in using the leverage. All you need to do is to deposit $100 and to verify your account. Obviously, you can't do it many times per person, so take this trade mindfully. I negotiated this action with Bybit because, in my opinion, independently, if you actually want to be a day trader or not, but like trading those small amounts, a couple of thousand, gives you a very good emotional understanding of yourself and an ability to find your invalidation point and overall on board the very healthy risk management mindset. With all that said, guys, I wish you all an amazing end of the week. Please let me know in the comment section down below if you actually like those more of the market review with a bit of a wisdom type of format. I promised that further on I would review the book that I mentioned today. It's one of my favorite ones. With all that said, much love, and I wish you an amazing weekend. Bye.